Are you having issues with support and resistance, or you're just new to it, you don't know anything about it? I made this video just to help simplify the knowledge if you're having difficulties with it. And also, I'm going to also be showing you how to also have those extra entry tips, those sniper entry tips at the end of the video. So if you're interested, stay tuned. So basically, if you're new to it, if you're new to support and resistance, we can understand that if anything holds on top of this, if there are candles staying on top of this, what would you call this? You call this support, right? This will be called support. Now, if you also have candles also like this, in trading we'll call it resistance. So basically this is what we'll be working with throughout this video: support and resistance. When candles are under, we call them resistance. When candles are on top, we call them support. Now, some people might also ask, how do we get to clearly see these supports? Because I understand some people have issues, trying to, let me clear out this. Let's clear out this. Let's make the chart clean. Let's start again. Let's have a fresh chart. So now, as I was saying, marking out support and resistance is trying to spot out the levels at which the market rested at a specific price line, or resistance, the price at which market refused breaking through. So now, if you need to understand, this support and resistance line is also on a chart, is marking to a price point. If we can both agree that every support and resistance is marking to a price point on the charts. How do I mean? For every support and resistance that you mark on the charts, it is definitely going to a price, and this price is the one that reads on the chart to let the chart understand that this figure that is given to me, there is a resistance that is being formed or a support that is being formed. Are you getting it? So now, for every resistance and support that is being formed, is formed because of a certain price. So at a certain price, the market always reacts. That certain price we don't know. That is why we use support and resistance. So support and resistance is what we build the strategy by trying to have stronger and much more precise entries. And for us to have those precise entries, we have to use what has happened in the past. They say the past is the key to the future. So we have to use data from the past to be able to understand that, okay, possibly if the price gets to this place, it's either the price will react and do the same thing it has always done before, or we get to wait and see the price break through. That is basically what we're doing. Now let me give you an example, a quick example for support. Let's try now for support. Let's say this market, this specific market, we have a downtrend, and we have the candle coming this way, and suddenly you have the candle now you have the candle itself having it end up like this. Instead of it ending up, you have it ending up like this. Now, if you have candles, they start forming this way. You have another candle form like this, then you have a green candle that forms like this, then you see the same red candle you get another one like this. Then you see the same green candle, you have another one basically at this place. Or you could get it having, you could have the candle behaving like this at the same place. Do you understand? Now this same thing that keeps happening at this point, now the market is trying to generate and trying to have a decision at that price point. So now that certain price point, which we don't know, in which the chart will tell us, the chart itself is trying to interpret what is presently happening in the market now between the buys and the sell. Now in previous time, those that buy and sell know that at this certain price is either we want to keep it going up or want to keep it going down. Now because we don't know what is presently happening in the market, and we don't know what is presently happening in any other place, or the economical value of whatever is either going up or going down, we will just understand that for every bargain between the buyer and the seller, there's always a price in which the buyer will never want to go down, and there's always a price the seller wouldn't want to keep allowing the market to keep going up. Do you understand? So now is that point we are trying to find out. Now we understand that for it to also have to happen today, like I'll give you an example of like a Jordan pair of shoes. If you were meant to get an Air Jordan, let's say Air Jordan 4, let's say the standard price was for $700, and it comes tomorrow and you get someone selling it at $1,000, in which we already understood that the previous price was $700. So for anybody selling at $1,000, it's only if the demand for the shoe has gone higher. That is when you can buy it for $1,000. But if the company comes out now and makes a whole lot of those shoes, what happens to that person holding at $700? The person definitely will lose, because at that point the price of the shoe will come down, maybe as low as $200. Do you understand? So this thing happens regularly during the market. It goes up, it comes down, it goes up, it comes down. So now at this point where it goes up and it comes down is where we are trying to get our entries, because those swings are also decisions from either, the big bankers, the billionaires, because they are the ones that actually control the markets. Basically most of us are just retail traders, and I think a retail traders not even up to a percentage of traders worldwide. So if definitely we retail traders will never have any impact in the market, why don't we just wait for those that make the market move, and let's see what they are trying to do. So now when you see the chart is trying to build up its supports, now you have to always wait and understand when this happens. When should you wait for support to enter is another question. Do you just wait on the daily, or do you wait in the H4, or do you wait in the 1 hour? Do you wait now? Now let me give you an example. Now let's say this is a gold. Now for we to understand that this is the point at which we want to draw support and resistance, we need to also have a data from a higher time frame. The reason is because the support and resistance created within the 15 minutes, it's just the bargain price at which you have for that 15 minutes time frame, is a short time frame. Do you understand? So within a day, anything can happen. The person can just look at, let's make a quick deal, let it go, or let it come down, let it go up, let it come down. But we know at the end of the month, the price must not go higher than this. It's an agreement between the buyers and the seller. So whatever happens within that month is just fluctuating. We know that it will not go higher than that. That is what we are trying to also know from the trading chart. We want to know when the price will never go higher than this, and when the price will never go lower than this. And the best way to be able to achieve that is, like I would say, your time is the best friend, and you need to always have the right timing to work with. I am a day trader, and I try to look for trades within the day. Reasons may misjudge that everybody has his own emotional level. Some, they like to hold their trades for days. Me, I don't like to hold my trades for days. I like to end the trade within the day. go in, go out. At the end of everything, between the day trader, swing trader, most traders, best traders, their best trade on the average is 1:3. Everybody's all out looking for 1:3. Be it swing trader, be it day trader, be it scalper, most best profitable ratio 1:2.5, 1:3. So why don't you just trade that? So now, if that is the best we are actually after, we are looking for 1:3. We are trying to get 1:2.5 on a regular time when we want to trade. Anytime we choose, that's your win ratio. So now, the way I trade and how to make it so good so that you can be able to see entries every single day. I use just basically 4 time frames, and I start with the daily time frame, which is amazing. This is gold. I know most people always shy away from gold because gold is very hard. But if you trade support and resistance, you understand that trading is actually easy, but it just depends on how you make it easy. Now, this is just a plain chart. All I use is basically the horizontal line. And the horizontal line is because it helps to pinpoint that price, because it's the price we are working with. At the end of everything is a price. Whoever buys, whoever sells, they will always want to do it at their best price. Fine. So now I use the horizontal line to be able to know those price points, and those price points are always given with a very clear support and resistance. If you remember what I said, I told you that support, you see the candles, they form directly, on top. They use the line to hold support. Even at times, you could also get candles behaving like this. It will do like this. It will act like as if it's actually going down, then end up having candles also generating like this. And you see another candle like this, and it forms like this. You can have candles like this form. You can have candles like this form like this, and you see another one like this. It comes boom, just right. Just right above it. You see what I'm saying? So the idea is that we want to understand where the candles are pushing into. Do you understand? We want to understand where the candles are finding it comfortable for them to rest. We want to know where they relax, where they rest, where they have their resting phase. So basically that's what support and resistance is. And now we want to accumulate different time frames so that we can have precise entry daily. So now I work with the daily time frame, and while I use the daily time frame, I try to make sure that the lines I draw, they are of different colors and different sizes, so that when I go to the lower time frame, I can always remember and spot that this was the time, this is the line of this time frame, this is the line of this time frame. So for this example, I will use let's say 3 pixels. We could use a color of black. So we draw another. We are trying to get support and resistance. If you remember, support and resistance is from, we are looking at the average of lines. Obviously, if you look at this, we are trying to just use the line to look at where most of the candles found its base. Do you understand? It's just basically trying to look for where most of these candles has found its base. There are times now when you see, there are times you could see, let's give another example. Let's say if you have resistance like this, let's say you started the candles like this, and now you get something like this. And let's even say you get something like this, and immediately you see something like this, and you get another candle like this, and you get another candle like this. You You see, all the candles is just trying to do is trying to cushion out itself. We can also still get another candle like this, because like it's trading, anything can happen. It will mess with you, definitely will mess with you. You don't expect it to always go your way because it's nobody's father's market. But we enjoy the process because trading is fun, you know. We don't know what is going to happen next, but we keep trading it because we work by probabilities. So you understand? So if you see this is also a good example of resistance. And this is the market coming up and doing what? Cushioning, having its cushion, having its resting face on this price point. Obviously, sometimes it could be that the lines, it could happen exactly, you could have it do like this, exactly that it wouldn't even pass the line, and you keep having candles like this. Yeah, there are times you have it behave like this, where it will form resistance and it will just have two taps and come like this. So actually the idea now about it is we are just trying to find out where it has this cushion, it finds its resistance, and we are looking for where it finds its support on the charts. That's just basically what we are doing. So now with the line, we try to find this support now. This is one support. Let's try to find another one that is like a resting line above. Can we both agree that this is a good resting phase for resistance? Can we see? It rejected, it rejected, it rejected, it rejected. What did it do? And it came down. And if you see this, the same thing happened. It held. What did it do? It went back up. So the same thing happened in a range. Now, if we both agree, because we understand that this is the daily time frame, each candle represents a day. Each candle represents a day. So obviously, the number of candles here now will definitely be up to a year, thereabout. Let's say from here to this place will definitely be up to a year. And basically, what we are trading is just the present moment, because I'm a day trader. I'm presently trying to just trade what is going to happen today, get some pips, make some money, and we're out of the market. So I only just basically focus on just what will happen at this zone. So this zone is just basically what I'm focused in. So whatever lines I'm going to draw in the daily time frame just must be surrounded just for this area, because this is basically where I am. I don't need to come and start marking out this, because definitely daily markets before you can get here is maybe like another 1 year. So basically we're just focusing on the one that is most important to us. Now we can get another resistance here. Yeah, we can both agree that this was once a resistance. It formed and it came down. So now once we do that, we also want to do the same thing on the 4-hour time frame. You see, we are trying to have it a breakdown. We're trying to have this breakdown like like Lego house. We're trying to make it look like we are building, just like building blocks. We're trying to have this building blocks for it. I want to remove this so that's clear, so we can all see at the same time. So now we are in the 4-hour time frame. Now if you remember, this is where we are in the time present moment in time. This is where we are. So we want to find lines around this place, so that we'll know basically where the market will find support or resistance. So now in the 4-hour time frame, the same thing we'll do. We'll try to also look for places where the market found the support and resistance in the 4-hour time frame. I think we can both agree this place will be a good. So we are in the 4-hour time frame. So now in the top 4-hour time frame, we try to reduce the line, to a smaller line. We could change the color. Let's say I use blue. Now in the 4-hour time frame, we've gotten one good support and resistance. You see, here there's a resistance, here there's a support. You see, here there's a resistance. It came up, it broke out. So these points is what we are trying to mark out. We want to try to know these points at which the market did these things. Why did they happen at this price is what we want to understand. Look at it. We can understand. See another one. See it here. It went up, it came down, it went up. So we keep trying to mark out these lines. You see another one here. There was a resistance here, full resistance, which used the support, came back here, but the daily, it pushed it down back. So I think that should be that for, okay, I think we can still get one more for the 4 hour. So basically, this is how trading is. It's meant to be fun, you know, it's meant to be amazing, it's meant to be enjoyed. It's not something that's too stressful. It depends on who trades the market. If you make it stressful, to give you a lot of stress. So once you're done with this, you can go back to the 1 hour, you know, trying to see, you know, once we could get, you know, with the 1 hour, we could make it much more, have a sniper entry. But if you look at it, I think we're good with the markings. Now, another thing, in most explanation videos you get online, if you're also trying to watch videos, I want you to also pay attention to time frame. The time always matters, and I want you to understand, when someone is trying to explain these things for you online and you see it on the video and they tell you enter here and you come down, you enter here, it comes down, sometimes that trade the person is showing you might take you 2 days, it might take you 3 days. You need to understand that not every trade you see online the person plays with his trend line and they say if you just enter here, you enter here, it comes down, 1:3, 1:4. Sometimes that trade is maybe like 3 days. You wouldn't understand. And now I'm sure when you try to enter every trade, you try to force a trade, you know, you try to force out your own take profits. But the idea with support and resistance now is that it gives you the entry and it gives you the take profits. You don't need to force a trade out of a trade just because you'd regularly want to have 1:4. It is not by you that gives the 1:4, it's the market that gives the 1:4, the 1:2, the 1:3. So you have to understand that in trading, every day there will be opportunities. Some days will be good, some days will be bad. Now, if you see from all the lines we've drawn, let's take it back so that you can see the advantages of support and resistance. Now look at, if you remember the lines we both drew, let's say we start from here. Now if you remember the lines we drew, which is the daily and the H4 time frame. Now these blue lines are the H4 time frame. These blue lines are the H4 time frame, in which the black lines are their daily time frame. Now what we try to do now is that we try to look for support or resistance with these lines we've drawn. Let's go to the 15 minutes, because 15 minutes is actually the best time you can actually have, you know, those exact sweet entries, where you can get those entries that are so sweet and easy with no stress, no emotion. Now let's say, let's just randomly, let's just go back, start with some, just to give you examples. Now, oh perfect, this is the daily time frame. Now if you say this is these lines, I want you to understand that these lines are demarcation, so that you know that these trades are just in a day. So you understand that, because some people will explain it in the video, they just put the lines and you think this thing happens with it. Some trades don't happen in a day. Some days it takes, some trades it takes 2 days, some takes 3 days. But at times we try to minimize it. For me, I try to make sure if it's not going, I'm out. I take for the day and I'm done. Now if you look at this specific day, if you see what did the market do? The market just traded between the daily supports and the H4 supports. So now basically this whole day specifically was just trading between this daily line and this H4 supports, this H4 line. So basically, if all you waited for in this whole day was this would have been one entry for you. Let's say with the break retest, let's say you give it this and you had this, you said this would have given you this as an entry, as a take profit. Not you trying to force 1:5, 1:6. No, it's not your doing, it's the market. So you basically just have to wait for those periods where you're either saying if the market is picking a buy or is picking a sell, either at the support line or the resistance line. It depends on whatever is happening presently. Let the market decide for you. So now let's just say you got into the market, you saw the market reaching this point and it climbed up to this level and it also came back, and you saw it and you took it from support and resistance because the market is doing what is resting above the line. And let's say you took a buy here, and this is your stop loss, because this is the previous point at which the market tried to push but failed to push at this support, and you took it to this place. Look at, that's another 2.37. So basically it's not really your doing that gives the take profit or the entry. It's just the support and resistance. Once the support and resistance builds in the 15 minutes time frame, wait for it. If it's giving you support, buy. If it's not going, let's say this one now, let's say this one you took a buy and you saw the market, okay, let's say you took a buy using this one as your previous stop loss, and you put it hoping for it to come back to this. So now you're looking at it and seeing what the market has done. The market has taken you out. Look at it. It went back up and it came down and took you out at this point. Seeing that this is already what? A failed trade. That means the buys are no more in this market. Now you saw it going up, it comes down, is now building resistance now at this point because it's broken and is holding, not even as a support, now as what? Resistance. Now seeing this, if you only, even though you had waited to even wait for the pull volume to have even gotten to this level, you take a good sell from here to the next line of zone. That's just one correct entry. At the end of it, I will keep saying, you are trading just to make profits. You are not trading to say I placed $10 and I made $1,000 out of that trade. No. The idea is that you compound your account balance and you can multiply that and be able to increase, if it's the $100 to $500, or if it's the $100 to $200, or if it's a prop firm, you want to get your 10%. This is it. So now let's take it now that let's say you traded the buys of this, let's say you took the buys of this and you've taken this is 2.4%. Let's say you fail here, this is 1%, you failed this one 1%, but you are still 1.2%. You got this one again, this is another plus 2.3%. So by now this is about 4% plus. Now let's say this one you are, the next day you are up, you took a buy here, but the market took you out. And you entered another one again at this point as a buy. Took profit and another 1:2. If you wanted to live for as long as you wanted, you see what I'm saying? Some trades are 2 days, some 1 day. This is another plus 3%. By now your prop firm account should be on plus 6% just from what? 1, 2, 3, 4 days, 5 days. So you need to understand that using support and resistance also, sometimes the trade happens every day, sometimes it doesn't, sometimes it takes 2 days. Sometimes if you are just the type of trader that you just hold on to it, you wait. If the day it gives you 1%, you take it. If the day it gives you 2%, you take it. Some days are very crazy where you could be so fortunate you get, let me try to see if I can get those type of switch trades like this. You see what I'm saying? This is one rejection from support and resistance. Now, by taking both support and resistance now, and you followed by using support and resistance, the rule of support and resistance, you drew the line of support and resistance, and you followed this market down just by support and resistance. And let's say because you're already trading support and resistance, and you know because this place has been used as a previous resistance and you are aiming the next zone. But because of the force, you were presently at the market, seeing the kind of push the market was going at. See how this day would have been so nice for you. But the truth is that not every day is going to be like this. These days happen like once in maybe 2 weeks. Days like this happen like once in 2 weeks. They don't happen regularly. But for you to catch this trade, it's just basically support and resistance. Support and resistance is all we are trading. So once your basis of the trade, of every trade, is just support and resistance, drawing the lines. We start from the daily line, the daily. Let's have a recap. We draw, if you remember, we drew lines. We drew the black lines, support, resistance, resistance. Remember, we drew this line, mark out support and resistance in the daily. We go to the 4-hour. We also do the same thing in the 4-hour time frame. We mark out support and resistance with a different color. You can see it. We did that with a different color, marking out these zones of support and resistance with a different color, so that when we come down to our entry time frame between the 1 hour and the 15 minutes time frame, when you are trading it, you already know from where to where the market is going. So now let's say having this whole day giving you a lot of manipulation, in which, let's say, you traded with this swing of sell and you went with the sell with a tight stop loss, aiming for this same previous support. So that's just a 1.37. So now it's not like you will now be the one trying to push the market that it should come here. It's not your doing. If you chose that way, obviously you've already gotten stopped out already. So now, to avoid such trades, best thing is to always look at it and try to understand what is presently happening in the trade. If you see the trade is turning against you in your time, what do? You take it and leave. Take the one that is left and leave. Don't try to stay too long. Don't try to hope on a trade going back. Try to understand the trade. Look at the new pattern. Now, if you are taking this, let's just accept, okay, this was the bias. We were expecting that it was going to go sell, but it took us out. What do? You draw another support and resistance. This is another support and resistance in the 15 minute. Look at this is another support and resistance. You see the market, and it came back up, did what with its support, and what did it do? Set. So whoever was in this trade with the risk of using this as his risk, see, you are up already plus 3.272%. So you need to understand it is not your own doing. It's always good to always wait, look at the trades, look for good support, resistance, try to find a perfect support and resistance, enter it. If it's going to go against you, it goes against you, look for another one. The market, you can't always get it every day. You can't always have the right entry every day. So if you enjoyed the video, you gained one or two things, or if there's something else I missed, something else you want me to explain, let me know in the comment section.